Hello ladies and gentlemen, welcome to today's European session market outlook at GDMFX. I'm Martin Bennett, Chief Account Executive and Trading Analyst for the company. Starting with the North American markets first, the Dow and the Nasdaq went about 5 points up yesterday's session. The Dixie index is down almost 0.5% to 97.50. All green data in the calendar yesterday. Initial and continuing jobless claims 17,000 better than expected, 0.080 million better than expected. Trade balance 7.8 billion better than expected. Factory orders month on month 0.6% better than expected. Imports and exports in Canada 0.31 billion lower than previous and higher than previous with 0.17. International merchandise trade for Canada 1.2 billion better than expected. Miss Yen's speech, not that much interesting. Traders are now expecting the Fed to raise rates later rather than sooner, later than ever before. Market expectations are for no rate increases from the Federal Reserve before the last week of November. Today, we have the non-farm payrolls and unemployment rate coming from the United States. We also have a few Tier 2 events, average hourly earnings year on year, average weekly hours, labor force participation rates. Those three actually are quite important, were largely discussed in the FOMC meetings lately. And we also will have the Fed Cultural Lakota speech today. Moving along to European markets. Basically, the ECB monetary policy meeting accounts yesterday, which was a review of financial, economic, and monetary developments and policy option, towards considered to be rather positive, and it reflected on the euro pairs in the afternoon, causing somewhat large movements versus the Aussie, 200 points up, versus the dollar and the yen about 110 pips up yesterday. 75 pips up versus the pound, 80 pips versus the Kiwi. Moving along to the UK markets, sterling fell against 13 out of the 16 major rivals yesterday after the construction data showed an unexpected contraction. This, combined with the concerns over the outcome of the elections, have caused sterling to lose its allure, so to speak. Yet, sterling is expected to have rebound after the election when investors will focus on the economic data and the Bank of England will normalize its monetary policy support for the pound. The FTSE 100 gained 36 points yesterday, closed at 6,790. Moving along to the Asian markets, starting with the Japanese Nikkei 225, which rose with almost 200 points yesterday, as the yen slid versus its rivals. The JPY Market Services PMI for March came pretty much close to the expectations. The China's HSBC Services PMI better than anticipated. Next week, on Wednesday, we will see the Bank of Japan monetary policy statement along with the press conference. And on Friday, the 9th of April, inflation data year-on-year in China, CPI and PPI outlooks. Also, the Royal Bank of Australia will post its rate decision along with its rate statements and retail sales on Tuesday next week. Commodities, S&P 500 index had a range of about 20 points, trading at about 2,060 now. Gold had a range of $11, trading at $12.01 per troy ounce as we speak. Silver had a range of about 40 cents. The WTI crude had about $2 range at $49.50. Currently, oil prices slipped on Thursday as officials from the big global owners remained locked in nuclear talks with Iran. That, if successful, could allow the Islamic State to release more crude oil into world markets. Negotiations on Tehran's disputed nuclear program have stretched well beyond a self-imposed March 31 deadline, with diplomats saying that the chances of a preliminary accord in the next few hours are finally balanced. Our neutrality remains, as we would like to have a confirmed statement over the aforementioned negotiations. With regards to natural gas, trading at about $2.64 per British terminal unit, hit a range of 13 cents yesterday. That's all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers.